Good morning. Thanks for wanting to make the time to speak to us about the topic of electrification. Very exciting topic these days. Lots of press coverage on the topic in general, both on residential level, I guess, with all the heat pump stories and whether they're a good case to invest in, yes or no. But that also extends, of course, to the industrial space where we are most active in and would like to speak to you about today. Um, so thanks for making the time. Maybe it's good that you briefly introduce yourself and maybe you can kick off with your vision on how do you think the industrial electrification is going? Are we on the right track?
Great. Well, thank you very much, Thomas, for having me. So I'm Bram Klaes. I'm a senior advisor with the Regulatory Assistance Project. We're an NGO think tank working in major energy markets in the US, in Europe, China, and globally, where our specific focus is to look at regulation and how that can advance the energy transition. So we advise directly, or we try to support other stakeholders in this transition. And I'm working specifically on electricity markets in Europe and Belgium. Have worked in Belgium renewable energy policy sphere for a long time now, and also spent about 5 years in Massachusetts in the US, working for the State Department of Energy there on renewables. So my background is mostly in policy for the energy transition, and of course, the electrification is one of the major pathways to decarbonizing our economy, including the industry. So it's a big part of what we work on. I'm not necessarily a specialist or an expert on industrial electrification. I'm more on the electricity market side of things. But broadly speaking, I think it's clear that whereas electrification of energy end users like transport and heating with EVs and heat pumps is speeding up, supported, of course, by decentralized renewable energy production, solar PV being very successful. That there's quick progress there. It could be, and it should be, a lot quicker, but we definitely see movement. On the industry side, I think at the moment we're only at the beginning. We have about 3% of process heat in European industry that is electrified, so 3%. Comparing that to the potential that's much higher out there, according to a recent Agora Fraunhofer Institute study, potential using existing technologies for electrification of process heat would be about 60% of all process heat. And process heat is, as you know, of course, the major source of greenhouse gas emissions by the industry, about 75%. So we could do 60% of that by using existing technology and going up to about 90% with technologies that are being developed at the moment. But that's, of course, more longer term, like general 2035 kind of time horizon. But so we're not there yet. We're only getting started, and it's, of course, something that a lot of people are looking at.
Yeah. If I may voice some of the industrial companies we speak to, they say, well, I want to electrify, but gas is cheaper than electricity. So do you want me to both invest lots of capex in new assets that are electric and have more OPEX due to the fact that electricity is more expensive? It's a tough case to make to their CFOs. How would you go about that, or what would you tell them to do?
No, I totally understand that concern. I definitely share that. It's one of the major hurdles, and there's a few hurdles to electrification, but of industry. But one of them is definitely the price ratio between electricity and gas is completely the wrong way around in many European countries. Not in everyone, but in many European countries, it's indeed cheaper to use fossil gas, than electricity for energy in your processes. And at the end of the day, it needs to be economical for an investment to go ahead, especially in industry with the expectation of rather short payback times. That is a really big hurdle, even more so than on the residential side, where the same barrier exists for somebody to invest in a heat pump. They're also going to look at the difference between gas or heating oil and electricity. But so I think that is much more sharp in an industrial investment decision that needs to be taken. So that price ratio needs to be turned around, or at least needs to be brought at a level that the more efficient electrification, the electric applications are, of course, much more efficient in using primary energy, so they can take a bit of a hit. And so electricity doesn't need to be as or equal to the fossil alternatives, but the handicap needs to be able to be overtaken by the more efficient electric technology, heat pumps or whatever it is. So in order to shift that ratio, I think, well, one of the main actions to take is, of course, to make sure that fossil gas is taken out of the electricity mix. It's a very clear and apparent risk at the moment to still rely heavily on fossil gas for electricity generation. It's what got us into the energy crisis after the Russian invasion in Ukraine in 2022. It was a sudden price hike of fossil gas because the supply from Russia was interrupted and stopped. So that made electricity prices jump, and gas prices still haven't recovered. If you like, they've of course come down significantly from the levels that they were during the 2022 crisis. But we're still at a level, I was just looking at it this morning, of 46 euros per megawatt hour on the TTF gas hub, which is more than double of the level that they were before the energy crisis. And this high fossil gas price directly influences electricity prices. So replacing gas through renewables, but importantly, also replacing the role that gas power plants, open cycle and closed cycle power plants, are playing in the electricity system as a resource to balance the electricity system. That role needs to be replaced by alternative, zero emission, non-fossil flexibility options. So we need to get more renewables in, and we need to get a lot more storage, interconnections, and flexibility in, and that will bring the average electricity price down, and it will importantly also reduce the volatility in the electricity market. So there's a number of ways to do that, and we can talk about that, of course, more in detail. But overcoming that price handicap is going to be a really important one, along with, I think, providing more security, hedging the risk of the large capex investments, as you mentioned, reducing the risk for those investments over the longer term. So yeah, but there's definitely other barriers. I think we also need to talk about the grid, for example.
talking about that ratio, it's my belief that we talk too much of it as a ratio that's always the same number throughout the year at any point in time. The ratio between gas price and if you maybe add the carbon price on top and electricity is sometimes very, very low below one. And sometimes it's very, very high, way
Yeah.
above one. And on average, you would come at a number which is indeed not attractive. But if you have a company or if you have a process that can be installed dual fuel, or if you have a gas based process and you need to invest because it's sort of out of lifetime,
Yeah.
I believe you could put an electric alternative next to it. And just to make the case on the short term, already start cherry picking the times where the ratio is in electricity's favor. How do you think about that?
I think that's absolutely right, and you're of course the better person to talk about that. But just the echoes that we get from industry and talking to industry is that indeed, if you are able to apply some flexibility in when you use the electricity, either by having thermal storage or by having the ability to fuel switch to between electricity and maybe some gas CHP plant, that it can be very attractive, especially for very large industrial consumers that think about a large chemical plant, for example, that will have relatively low electricity prices to start with. So they're of course a very large consumer. They negotiate their own prices. They have bilateral contracts. So their electricity price is a lot lower than than the price that you and I will pay, or that small or medium enterprises will pay. And therefore, the handicap is likely also lower that they need to overcome. Of course, their gas is also going to be cheaper. But that ratio that we often refer to will be not as hard to overcome, especially if they can have some kind of flexibility in when they use their electric heat pump or large scale heat pump or other electric application. So I'm sorry. I think that hints to another big barrier, which is a lack of knowledge or information or awareness of the options that are out there. Maybe also a lack of sense of urgency among some. I mean, a large number of industrial actors are, of course, very aware of the need, but I think a not insignificant part of the industrial actors are still not thinking that this is something that they should be acutely worried about. And so therefore they're not asking or looking for solutions. So overcoming this knowledge gap about, one, what technologies are available, what can electrification do for me in my process is an important one. And then what are the economics? What does it look like? What is the electricity going to cost? And also, what is the CO2 cost that I'm going to avoid? And then third, what is the revenue that I can get from offering system services to the electricity transmission system operator? So by offering flexibility to keep the grid in balance, you can get important revenues because you're going to be paid for that. And this is something that is, of course, not core business for a lot of companies, which is maybe not, which is maybe the reason why they're not jumping at it. But it is important to make the business case positive, and where assistance from experts can make a real difference, of course.
Yeah. And if you're talking about motivation, either intrinsic or nudged by external factors, regulation comes or might come into play. Is this like, do you see a big role for regulation in this? Or if you're talking about knowledge, about setting the examples, maybe more liberal way, people can see the success and sort of they get the fear of missing out and they go after it by themselves. On the other end of the spectrum, there's also some laws or some incentives that might provide a framework which helps hedging the risk of a capex investment, which might help shifting some costs from the gas bill, from the electricity bill down to the gas bill. Um, what is the role of regulation, and do you see it mostly regional, federal, European? Um, what's your
Yeah.
take on that?
Well, I think regulation is really important. That's not going to surprise you. That's our bread and butter. But we do think regulation plays a crucial role in making sure that the most cost effective outcomes are reached. And so therefore, regulation needs to set a framework for energy markets to also stimulate innovation. So it shouldn't be overly prescriptive. It should set the right boundaries within which investors then can choose and pick whatever option they think is the best one. So in Europe and then international levels, we do have, of course, quite extensive regulatory framework for energy markets already. We also have a very clear direction of where CO2 emissions in industry need to go. And there is the emissions trading scheme, which sets a clear linear trajectory for phasing out CO2 emissions from large industry and electricity production. Soon, in 2027, this will be expanded to include all heat and transport emissions with the ETS2. Something, by the way, that probably not all SMEs, small and medium enterprises, are aware of, that they're soon also going to fall under the ETS. But so there is a clear carbon price signal that should guide investments. Now, the electricity market regulation has, of course, recently been updated, reformed, refined, and some of what is included in the latest round of reforms is interesting and important for supporting this industrial electrification. For example, the ability to participate in balancing markets is improved. We're going to have more shorter term gate closure times for the intraday markets, which means that the variability of solar and wind can be better anticipated by market actors by being able to have closer to real-time offers to the market, to the energy market. And that's, of course, an opportunity for an industrial that has electrified and can offer flexibility to that market.
Maybe one thing, Bram, if it was announced this week that Tenet, for instance, would reduce the sort of data, the frequency of sharing what the imbalance position on the grid was. I mean, couldn't there also be some overshoots when it comes to, yeah, indeed, shorter gate closure times are good, more frequent settlements are good, but then what if people start restricting access to data about the condition of the grid? Wouldn't that make it more difficult to balance it or to activate flexibility?
Well, yeah, I mean, that is, of course, important. You need the transparency on the situation in the grid is really crucial. And there are also clear requirements and reinforced requirements also, both on the transmission system operator and the distribution system operator, because a lot of companies are, of course, connected at the distribution or medium voltage level. And so system operators need to go forward, improve the data transparency, not step it back. I mean, one practical example of things that they need to do is publish grid hosting capacity maps in some form or another. And we at RAP have done we looked into the current status in Europe of providing those grid hosting capacity maps. So those are maps of where the grid is more or less congested, and therefore where there's an opportunity to expand your electricity connection requirements, or to do a new investment. So those are important points of information. But definitely throughout Europe, there's, let's say, a lot of room for improvement. I mean, I have to say, in Belgium with Elia, we do have one of the good examples of providing such information, as well as on the distribution level in Flanders with Fluvius that also provides that information. But transparency is key. Otherwise, markets cannot function properly.
Yeah, indeed. As a startup, we participated in the testing of Elia to publish like their real-time price or 1 minute ahead of the farther hour. And Fluvius is now rolling out a flexibility or a market testing as well, which are all interesting developments. Dirk shared a question in the chat about the profitability of certain ancillary service schemes or grid service schemes. If you deploy some flexibility, you can of course make use of several value streams to reduce your cost or to earn some money with that battery. That money or these valorizations have fluctuated quite a bit in the last times. You can see, of course, the UK as well with heavy saturation on certain grid service schemes. What would you expect the future to look like? Is it like pure value stacking and cherry picking at any point in time what the best scheme is? Or do you see new things popping up? Any perspective? It's a bit Madame Soleil type advice we ask you, but how should we do it?
Oh my God, that is a really risky question to answer, because I mean, yes, of course, there's going to be fluctuations, and there's going to be the early movers are going to be having an early advantage, and then it's going to flatten out a bit, and then it's going to come back. So that kind of volatility, I think, is inherent, and you need to be expecting that and being able to deal with that. We can't take away all risks from everybody. I mean, that's not the intention. That's also going to stifle innovation. So that's not a good thing. I would also say that, value stacking, if you can diversify your portfolio of services, that is going to be a winning solution or a winning proposition. I would expect that in many markets in Europe, any kind of solution that you can deliver for local grid congestion is going to be important, or can be important, especially in the Netherlands, for example. Right now, that's really acute, with electrification in some companies not being possible because there's just no room in the grid. And we're maybe not that far off from that situation in other parts or in Belgium. Although I think in general in Belgium we're in a much better spot right now. But grid congestion, and so I would look at co-location, wire sharing, and also flexible connection agreements, which are, by the way, also now solidified by the latest round of electricity market reforms. So there, it's important that the regulator provides a framework for those flexible connection agreements, and importantly, to make sure that whoever signs such a flexible connection agreement gets value back in return for that flexibility. I mean, nothing is ever free, and as a company, I would not just voluntarily sign up to a flexible connection agreement without getting something in return. But that can be many different things. It could be just a quicker connection, more speedy interconnection, which is, of course, also very valuable or can be valuable. It can be a payment for that flexibility when you deliver it. It could be, and maybe that third option is the most interesting for companies, a structural reduction in the grid fees that you pay, as long as there is a need for that flexibility. Because that would provide some long-term visibility on lower costs that you have on that site. So yeah, grid support or grid congestion relief is going to be, in my guess, an important one in many spots in Europe. Now, of course, we do need to make sure that the grid is also reinforced itself, and there's a lot of investments that are needed to increase the capacity both at the transmission but also at the distribution level. The investment numbers, I mean, you've all seen them: 500 billion euros. And at some point, those numbers become meaningless to somebody like me, but very big investments. And my takeaway from that is it's going to be really hard to make that all happen in time. So in terms of regulatory developments, I would expect that the provision of price signals that support or encourage grid users to be more flexible are going to be something that you should expect. And then I'm talking about time of use price signals from the energy side, but also from the grid side, as well as the biggest gap in our perspective in European market design is the lack of locational price signals. So we have in some countries like Germany or France or the UK, very big bidding zones that totally obscure any kind of grid congestion, and that's impossible to maintain. So if I were an industrial investor, I would expect that at some point there's going to be locational price signals also, which can be a benefit because if you're in the right spot, you will benefit from that.
It might also trigger some valuation differences of certain real estate or locations based on that. You see that already with grid scale battery location,
Yeah.
which is the areas close to the big transformers really extraordinary, which might already be a hint towards that.
Yeah. I'm sorry, Thomas, your sound was a bit choppy, but yeah, I think you referred to the batteries, large scale grid connected batteries, electrolyzers, similar. I think data centers, like big new loads that are going to be situated somewhere, grid information is going to be key for that.